Hey guys, Boris Schlossberg from BK Forex. Welcome to our weekly Forex technicals for 223 to March 1st of 2013. We're going to look at the key levels to watch in the upcoming week, which should be a very interesting week since so many things have gotten broken. Past performance not indicative of future results. As always, trading Forex carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. And before deciding to trade any such leverage products, you should carefully consider your investment objectives, low experience, and risk appetite. Possibility exists that you can sustain a loss some of your initial investment, and therefore you should not invest money you cannot afford to lose. Should be aware of risks associated with trading on margin and seek advice from an independent financial advisor. Information including commentary trade ideas provided by BKForex.com should not be relied upon as substitutes for extended research. It should not be performed for making investment decisions. We're merely providing this information for general information. Information opinions presented here do not take into account your particular individual investment objectives, financial situation needs. All investors should obtain advice based upon their unique situation before making an investment decision. If you tailor trade size and leverage to their trading and personal risk appetite. We're not responsible for any loss incurred in investment made by readers and clients as a result of this information, and we do not render investment, legal, tax, professional, other advice. And if such advice is needed, seek advice of a competent professional. Let's start with the most dramatic close on Friday, which was cable, of course. News leaked out on the close that Moody's is downgrading UK sovereign debt. That pushed cable in the 4 o'clock hour, in the 1600 hour East Coast time, down through the 52 handle towards 51.73. But here's the key level to watch. I think that's going to be a very, very key test of where cable is. This 51.30 was the spike lows from 2 days ago when there was a big run in the Asian session. We held that so far. So interesting couple of scenarios that could occur on Sunday night. If we have massive negative overflow on cable, we could actually gap down and gap below this level. At which point, I think it becomes quite interesting because obviously if you gap down to the 51s, the next material level, the absolute critical level that everybody's going to be gunning for is the 150. But at 150, I think you're clearly going to find some value support from the buyers. So let's just go back. We're going to have to go back probably about 2 or 3 years on the chart here. The primary level of support here on the longer term charts is around the 52 level, which has been broken effectively. So we don't have any reliance on the 52 level, so we have to go back all the way back, all the way back, all the way back. And as you can see, the 50 level over here is really the next big chunky level, and that's really a level all the way from 10. It's a very far away zone, but it's a big psychological level. So I think let's just go back to just take a look at how chunky the 50 level was. We have some support obviously here, going all the way back to excuse me, 3 years. So if we break down into the 50s, I think that the sell through the 50s is probably going to be minimal, and there's going to be some short covering that comes into the play. Now, a gap down open generally creates always possibilities to fill the gap back up. So if we gap down through the 51.30s all the way down to maybe 150s, there's going to be a slow but probably discernible churn back up to fill the gap, and then we're going to have the real move come in afterwards. If on the other hand most of the sort of bad news is kind of taken in, and we're able to hold, and this is a really critical thing, we're able to hold the 51.30 lows, that actually may be proved to be mildly bullish towards cable. And the idea being that everybody has already anticipated bad news, all the stuff is baked in, forward-looking indicator may be a little bit more positive, market could be feeling more of a short covering role. So I think the interesting way to play this is to obviously watch the open in Asia to see how far and how strong we test this out. And to me, if we don't gap down, then the real interesting test will be the 51.30s. Now, if those get given in Asia, then the possibility to break down to 150s could be very, very strong. So cable becomes a very tactical trade here, depending on a lot of different moves from a lot of different actors as to how it's going to go. Euro, on the other hand, I think is a clearer look. 31.50 is obviously holding for right now, and 31 is the big support area over here that we have on the charts. Actually, it's sort of like yeah, 31, 30, 50 is the real big support area. It's clear that the 130, in my opinion, is going to be the big Maginot's test for the euro dollar, and that's pretty much where it comes in. But it also looks very, very probable that given the negative momentum that we have in the euro and the structure as it stands, if we break the 31.50s with any conviction, the move towards 30 becomes much more probable. On the other hand, and you notice it here, there's 2 days in a row that we've sort of held the 3160, 3150 zone. If we're able to just hold above the 3150, 3140 zone, then a short covering rally back up to 133, a very strong possibility. So the way to trade this, I think, is going to be to look at these key levels and see how they break. Again, a break into like 3140s, 3135s really augurs very poorly and suggests we have further momentum. Definitely take out the 31s and probably go to 31, 3050s. Could even stretch all the way out to 130s, which is the really, really big support area. And this is where I think a lot of the value proposition is going to come in, and a lot of the buyers are going to come in the 130s just because of its a long-term support zone. Aussie, on the other hand, is a churn, but to the downside still. Aussie had a sort of a nice big short covering rally off of less than dovish RBA comments out of Governor Stevens. We clearly have very, very strong support 102.25, but this to me is the key tell level. We give 102.25 to the downside, it really opens a way towards 101.50 and possibly even parity. On the other hand, the top side is pretty much circumscribed by 103.50 to 104. There's a clear, big chunky area at 103.50, and even a bigger area of resistance at 104.50. So whatever churn you have in the Aussie to the upside is going to have to work through a lot of those offers to the upside for the time being. And obviously dollar yen, still I think a very, very interesting tell here. Dollar yen is a distribution for the time being. Now what's interesting about this kind of distribution is that it's really finding tremendous amount of support in this 93 area. You would have thought that given how much time we've spent not being able to make fresh highs, and the fresh highs here, the key tell level for the bulls is 94.50. If 94.50 gets taken out, it's a fresh up leg. It creates a whole bunch of fresh momentum, and it creates a possibility obviously towards 95, maybe even 96 on a run up. But we have not been able to clear 94.50 for a good almost 2 weeks here at this point. It's just been a sell the rally mode. However, we also not been able to clear 93s to the downside with any kind of conviction, and that's really the key thing to me. So we're trapped in this very, very tight range zone where 94.50 creates a breakout point to the upside, and 92 really creates the down point to the downside, and that's kind of very, very interesting. So you have this very tight range with both the bulls and the bears in a state of equilibrium. Neither one really able to push the market one way or the other. That's why I think the key tell levels here is going to be 93s, of course, is a minor tell level. 92.50 would definitely send alarm shocks to anybody who is long, and then a break of 92 really opens up a distribution all the way out to the 91s, which is where you have a lot of support here. On the other hand, topside has just been stymied, and trying to trade at topside right now is very tough unless you have a clear break of the 94.50s, at which point it would really give you a full green light for further ahead. So yen kind of very interesting in this war of attrition between the bulls and the bears at this point, with 92.50, 94.50, the key range that we're all looking at. As far as the other cross pairs, they're really kind of, well, let's just take a look at the calm downs as well before we do that. So we saw the Aussie, the Kiwi, kind of basically finding again for the fourth, fifth time quite a lot of support. Now 83 has been a very, very good support area for the Kiwi, but as you can see, it's an 83-85 range with 84, 84.50 really creating a lot of chunky resistance to cable. So chunky resistance to Kiwi. So at this point right now, the Kiwis had just yet another bounce through the 83s. However, I think the other interesting thing here from a momentum point of view is if we turn to the downside, a true very negative signal in the Kiwi would be a break of the 83s. If we break 83s to the downside, it really opens up a path towards 82s, which is the next area of support, and then of course a really, really strong downdraft all the way out to 81s. To the top side, there was really nothing interesting until the 85s get taken out, and they have to get taken out above this 85.30 level in order to clear all of the overhead resistance. So the bulls have come in again to support the 83 area, but we have to see how well it trades here. If we start turning back down into the start of next week and start to test the 83s to the downside, a break here could be a very, very important break because it would be a failure of all of the support that we've seen over the last month and a half. Lastly, dollar CAD finally making fresh highs. The 102 went all the way up to, I believe, what is it, 102.55, right? And then came back down. I was actually, it's funny, when we were talking in our BK webinar on Friday, I was making this very interesting case that although dollar CAD obviously had a big, strong breakout, this 102.50 level was a big, big overhang. This, as you can see over here, is a lot of resistance here. It resisted it twice here in 12, and I felt it was actually a more interesting sell than it was a buy. It turned out to be I was relatively right, that the resistance here at the 102.50 was so severe that it needed to really clear it in order to get a full path all the way out to 103.50 to 104. It did not. Right now, the 102.50s did not get overcome, and so now it looks like we could test the 102s to the downside and possibly find support back to 101.50 as we have a minor correction in dollar CAD. And this was dollar CAD is one of those notorious pairs, I think, where you really can trade it in terms of trying to sell tops and buy bottoms much more than some of the other pairs, because it tends to really stall at key momentum points. And here was a great example how it stalled the 102.50s. It came right back as profit taking came in. So that's kind of how the week shapes up. A lot of very interesting, very tactical positioning. Cable obviously trying to look for the 150 on this very, very bad news. Euro still having a big battle at the 130-150 that could then bring us either to 130 on the downside or a small short covering rally towards 133. And dollar yen just still having this war of attrition in 92.50s to 94.50s, with both sides very, very interested to pushing it at those edges, because then it would give us much clearer momentum movements on either side of the trade. So I'm wishing you guys the best of luck and the best of trading. This is Boris Schlossberg for BK Forex, over and out.